Hello everyone. This is the Opinionated Trader, and today markets were different. Um, there were a few things that I thought I could do well. Thought that I could time the, you know, closing of the gaps and all of that, but that was not the case. Actually, the market did not necessarily close too many gaps. It did close this gap here on SPY where it got to a high of about 393.96 and it went back to a area of resistance and various back and forth play at 391.64 in that area, and it bounced off of that and never pulled back. And I was expecting for it to do what it may normally do, to just maybe pull back at least to 390 one to maybe even 389. I had a put for 387, and of course it went to zero. Also the same thing with IWM with the iShares play. I was expecting this to pull back and close the gap at least to 170, maybe even to 169, even going back to, lows near 168, 167, but again, these crossed and maintained their uptrend, even though it was not a smooth continuum of an uptrend. The biggest thing that I saw that I did not pay attention to is the levels at which it chose to retest. When it could have retested down here and it didn't, and it just retested here. I was trying to get in, I think maybe around 2, thinking it was going to retest because it kind of did a little double top here, but double tops are not always the case when it comes down to trading. Even though technically there was a slight pullback, I don't even want to really call that a pullback. It was just catching a breath, as my brother would like to say. Maybe there was a little opportunity here, but as I said before, you have to pay attention to these little areas where the price broke out from and it's coming back to retest. We can't assume all the time that a stock is going to go back down all the way and retest where it necessarily came from, because the support may have been established. Technically here it was resistance, now support, and that is what I was not paying attention to. And having the ability to flex between the different rules and regulations, it will assist you in decreasing your losses and getting into counter trend plays that are not going to execute your ideal thing. You want it to give you 10 to 20 cents on a dollar move when it's not even trading down and you have a negative delta for a put. So again, double top here, you did see a little bit more of the typical pullback here, but again, never did go back even to the old resistance becoming support. So once again, another leg up and a break above here. And again, never did a retracement all the way down like it did the other day within a matter of seconds, in my opinion, but it was really minutes. And so, will this continue up back to retrace to the 402? Maybe so. Could we just be on the uptrend to go to maybe the 412s and 413s in the past? Looking at the daily whenever it decides it wants to load. And I guess if one were to look at the daily, still has a little more area that it needs to go up to get to even entertain 4, 13, 15, and ultimately 18, where it could pull back. But right now, it's trying to get back to that 402, but it's in my opinion, having issues here at this 395, 396 level. But if it's getting support at the 391 and 392, then what we may begin to see is a little bit of consolidation, and then may decide to break up or break down, and that is the play you probably want to wait to see. And I always know that it may possibly retest that break. So you can't just say I'm gonna go long and think it's just 100% go long. There may be some pullbacks, or you could have an extensive amount of momentum and just push its way through. But still, if it's a long uptrend with no staircase formation, in my opinion, you have to be careful of those extremely quick moves going to the upside, because they will more than likely retrace, but not necessarily. You know, that's the thing about trading. It is increasing your possibility of a possibility with knowledge. You'll never know exactly. The new one that I did pick up was the IWM, based on some information from a fellow trader that is also on YouTube. And this shows some similar problems as well, but it, in its way, did the same thing. It maintained the uptrend when it took and did its crossover here around about 11:45. There were some pullbacks in here and there, but it, moving average did not drop below. It maintained that it was in an uptrend, and still that's what it did. It did not go back and close this 169 gap. It did not go back and close this 168 gap. Anything below that whatsoever. I'm not saying that this is a 100% beautiful uptrend, because the slope to me is still a bit more linear than it is, which I know that may be contradictory, slopes and linear. But it's not as, the angle is not as great as I would want an uptrend to be, where I felt that it was something that I could really trade. Now, someone else looking at this would say, well, here's a box, you can draw around it, and that was just a consolidation box. You just didn't know how to trade, and they may be right about that. Again, we are still on a learning journey, but from what I have hopefully learned, I would hope that it could be of some asset to you. The breakout on this box, where it did go up, and excuse all the stuff on my chart, but you can see where it broke out of that box and it just ran up to 172. I was looking for it to technically really break out from this 171.5 area, which it did, and that is why it's very important for you to sometimes wait. And some people will get into trade and wait to see what it does and do a stop loss, and it's fine, because it could have very well just pulled back like it has done in the past and go back to this moving average of 171.46 where it bounced off at, but it didn't do that. It pulled in and went back out and broke out from that high and created a higher high and went up again, and it pulled back to the same area of support, but still notice that this is still in the uptrend. A little bit better of an uptrend in my opinion, somewhat, but still not like I'm used to seeing. And I want to look at SPY right quick. They really weren't supposed to be maintaining, in my opinion, an uptrend. It appeared to me today should have gone on down and traded down, but that is not what happened. It kept going and never recovered to the downside, and this double top formation pulled back, going up and pulling back lower. So there may be some possibility this could go on down and break on down maybe Monday to 170.5 maybe, or it could just use this again as a level of support and go on back up. So that's why it's important to wait for a break and retest, sometimes another break retest, another time break and retest. And just, but if you really don't even want to think about that much, the moving average was just there to tell you, hey, I'm not ready to call it quits just yet. So looking at this on daily, still is in the overall downtrend. So I can support it going back to 167.5. Whereas this, I'm not so sure. There are lots of areas it could pull back to. One being here at the 390, and then of course this one here at the 386, 387 area. So even 385, but like I said, this one you can look at that in more than one way. I feel like it's going to consolidate and break out. I think this is overall on a breakdown, and how my settings are on this one is still in the uptrend. So that's why I said I'm thinking this may try to retest this area here, whereas our IWM, I think it's more so headed on down. It could change direction, but it's right here at an area where it could have gotten back to this area and bounced off and may try to go back up, or it could break this area once it goes back and retests this area and break on down and go to a level of 162 and beyond. So we're going to wait on that as well. But that's all I have for you all today. The information that I am discussing is my opinion only. Stocks, options, futures, forex, all these various trading terms and products are subject to great risk, and this is not financial advice. So you make your own decisions. I highly recommend that you do paper trading, and I highly recommend that you understand the foundations and fundamentals of trading before you put money in, because literally you can blow through $100 in a matter of 10 minutes, especially when you are trading 1 day option expirations, and those are very, very liquid, but they're also very, very costly. You can be at $50 and down to $5 in a matter of seconds. I don't recommend beginners trade 1 day expiration options. You should try at least do 2 weeks or 1 week at the least, until you are greatly familiar with the fundamentals of trading, because it can be a very expensive lesson. So this is not financial advice, but in the regard to risk taking, you do need to make sure that you are not spending bill money, you're not spending your tax money, you're not spending your kids' money for daycare, your light bill, your phone bill, your food, your electricity, none of this stuff. Or anything that you need, medicine, your parents' care at a nursing home, if that's the case, you need to make sure you are trading money that you can miss, which in these days is not much, I'm going to be honest with you, but be mindful that, you can't play with this stuff if you don't know what you're doing. It hurts me personally to lose $9 if I have $18 in my trading account. I'm teaching you things that I am still missing, because I believe my failure is your success. A lot of people come in here and preach about, oh my God, I turned $10 into $1,000, and it's really true. You can. I've seen it with my own eyes how someone could have bought one option for 1 cent and it turned to $1.20, and if you had 100 of those, that right there is 10K. But that doesn't happen every day. That is based on your skill set. That is based on your risk taking. That is based on your timing. That is based on your stock. That is based on liquidity, time of day, your daggone platform that you're trading on, and your access to funds. Are you willing to risk $100 when that's all you have to blow your entire account, which is not what we teach and what we recommend for people who are trying to learn how to trade. So, those are realistic things. As I've stated, I have turned 7 cents into $1.48 trading Bank of America. I got in the right call at the right time. Timing is everything with this, and learning is everything. And your money is your money. And if you can imagine rolling down the window, letting your paycheck fly out the window that you just cashed out of the bank, that is what's going to happen if you do not study and show yourself approved with this stuff. it can get away from you rather quickly. So if you're not studying and trying to learn this stuff, you're just rolling down the window, letting the money fly out. So if you're not willing to do that in real life, don't do it while you're trading. Learn before you earn. It's what others say, and it makes all the difference in the world if you decide that this is something that you want to take up. So no, I do not recommend you quit your day job until you can trade so well that you put in 300, $500, $1,000 days are nothing but pocket change to you. Do not quit your day job to trade if you have not learned how to trade properly and effectively and consistently. Consistence. Because a good week is not a good trader. It doesn't make you a good trader. It makes you a lucky trader. I've had luck, but I'm a full-time reseller, and I will not quit reselling to trade. Full-time, I made more money reselling on my eBay account this week than I did trading. Because I've learned eBay, but I have not mastered it. But I am still learning to trade. There are mistakes that I know that I can inform you about to make it so where hopefully you'll make your own decisions based on our experiences. We are sharing our experiences of trading. We're not trying to tell you what to do one way or the other. We're telling you, as a result of this action, this is what happened to me. I am an isolated event in a world of billions of events that occur every day. So my experience may not exactly be yours. But what I can inform you is there are many experiences that I didn't have to have that you don't have to either. So that is what this is. This is teaching you about experiences. We're not giving you financial advice. We are giving you breadcrumbs of experience that you must consider if you're going to decide to embark on this journey of trading. So I hope that this little review of the processes of trading has been of some assistance to you, because like I said, nothing is consistent. If you honestly were to look at how SPY traded yesterday, it literally gave people an opportunity to recover some losses. It gave them an opportunity to just get back some funds, because it allowed for an opportunity for them to get back. So if you were trading SPY on the uptrend at the open, you got in at the beginning, you ran it up all the way up to 399. Then if you held it on over, it went all the way to 389. See, this really didn't happen today. And true, it did break and go below, which technically it did what I wanted it to do in the pre-market. And once it did that, it just had free will to just go on up for the next day, because it technically broke the low. It tried to recover, broke down again, and then broke out from that pre-market and then went up. But still didn't just have a clear, complete run up. As you can see, it still just closed that gap. I was expecting this play over here, and it didn't do it. Okay, so, but as you can see, it closed gaps from pre-market. See, it closed the gaps, and now this gap hasn't been closed yet, and there's something a little down here too. But here is it looks like it wants to come here and go up in this area, and maybe go back to that 402, maybe go to 402.5 first, or it may get up to 399 and just pull back, or as it did today, it'll get to that area and possibly break out or break down. But what you can do is possibly ride it up or ride it down. Depending on your risk, you may decide to wait, and someone else may just say, hey, I'm going to trade it, and whatever side I'm wrong on, I'm just going to get out that side of the trade. Over here with IWM, we're due 2 days and 30 minutes. Same thing here. If you literally pay attention, ran up, pulled back, just as I did yesterday. It is right down here, went up, and did not completely recover. So you could just trade these two friends here if you like, and they didn't necessarily have a 100% similar trading picture, but it was kind of similar to me enough where if you traded one way, you could have traded this one the same way. But you have to be on the right side of the trade. You have to be on the right side of the trade. And as a very prominent YouTuber that Trey said, it's okay to be wrong, but it's not okay to stay wrong. And it may be a trade that is going to happen in the future, but it hasn't happened yet. And let's look here. We were still technically on a downtrend, but as you can see, these started curving up. And technically, same thing here. Now, some certain traders, they're going to wait till this completely crosses up to get in a trade. But look at the low to the high, how much money is left. So some people have other indicators. Like I have other indicators up here that tell me try to go long, try to go short. They're still technically bearish because they're still not at their highs. So in a sense, it's true. But if you are closing gaps, if you are scalping and you're just doing very quick day trading techniques, then closing the gap, as again prominent traders state, is a very easy process to make a quick buck. But in some cases, as we saw today on the lower time frame, some gaps are not going to be closed, but the overall gaps will. So the big gap was closed if you were to look at the morning pre-market high to the low. And it closed. And it broke from it, pulled back a little, and went back beyond it. Same thing here, pre-market. Pre-market high that then closed, and then it ran up and closed here. So like I said, down, up, closed that gap, broke out just a tad bit from it. If you would have just said, I'm going to anticipate that this is going to possibly go back to the pre-market high, then let's just look at the open. If you would have said at the open, I'm going to try to get a cheap price for 395.33. So let's just go look at that. 395.5 or 396 call at the open. Okay, at the open, let's go look and see what it looked like. This is one thing that I'm trying to learn to do, is capture the timing of things. And y'all, it don't always work like this. This is always chance. But the possibility of there being a close of that gap is normally strong unless the trend that's opposite of that is strong. As you can see, we had a strong uptrend. Well, we had a decent uptrend where it was not possible to close some of those gaps. But we closed the main gap from pre-market, but not the gap at the open. So that's why it's important to look at the pre-market so you can see what's going on before the market opens. There's a lot of trading going on there, but so as you can see, still kind of high around the open, but around about 11.12, it was about 23 cents. It peaked again at $1.03. Out of it then, Got in at cheaper at 35. Rode it all the way up to 96. Got out of it. Got in it again at 42 cents. Rolled all the way up to 18. 73. Rolled it up to 16. 24. And kind of close to the end. I probably would have been really pushing it, depending on how many contracts you had. But I probably would have just got out here. That would have been, I think, a safer bet if you were still just trying to do 78 to 120, risking 70 to make 50. Doubt it, but risking 42 to ultimately make $1.12. That was a bet. So really by 321, right before 330, that would have been a good exit. And there still was opportunity here, but if the market that you played to that end, 27 to 86, right at the close, and you could have got exercised on, but I would say 27 to maybe 62. That would have been a good scalp, even from 27 to 47. I mean, halfway there, 52. You could double up. That's not bad, but I wouldn't have done that. This time I would have gotten into that trade, maybe 12, 18. No. 11, 12. And that from the 23 cent all the way. And it broke out here at 70 and just pulled back. Went to 73, pulled back. If you would have held it for literally maybe 50 minutes, 23 cents to 103, is that $90? $80? Yeah, $80. Just not bad. You ever had 5 contracts, that easily could have been $110 turned into about $300 or $400. Can you do that in 50 minutes? Not many places though. And that would have been it. You really could have called that quits. That was the highest it went that day. Still got high to that 83, but that was it. That first area breaking free. 1202. That was the play. So 1202. Yeah. For amazing when you see that. If you would have got in at, I think you said 1112. At 1112, the price was about 390. 390, 389.87. Got in there, wrote it up to 394. That was the cleanest play of the day. And all of this didn't produce what this here did. And those are the good entries and exits, even though someone's like, well, it went all the way here, but did you see what the option did? There was a lot of back and forth here, and that creates a lesser value, plus it was getting later in the day, so that affected the value as well. So that 12 o'clock cutoff, 12:30, you can still make money on the second part of Fridays, but it's very hard work to make the same thing that you would have the ability to make in the first part of the trading day between really 9:30, 10:30, at the most 11:30, capping it at 12. But those are my experiences. Whatever your experience is, it will be your decision. But make sure your experiences are based on your studying and not your instinct. Anyway, y'all, this has been my little recap of SPY and IWM on today. I hope I said something that will expand your repertoire regarding trading, give you a realistic sense. I lost $7 today, which is a lot of money for me because my account is very small. Because I was hoping for both of these plays to come back and retest as they had done in the past, but they had attempted to come down lower from a previous retest and failed to even break down completely lower than where they could have gone to. So to me, that was a telltale sign. And the fact that they broke down in the pre-market and that's as far as they went, lets you know that there wasn't enough supply for them to stay there. There weren't more sellers than buyers. There were more buyers than sellers, and that way it stayed in an uptrend. It wasn't a beautiful trade up, but this was a consolidation area here, and it broke out here. So once this was the breakout, and it just pulled back to this area of support, it was resistance, and it just went on, and it kind of pretty much did the same thing here. You just have to pay attention to every little area. Use your rules of interaction with the chart. Okay. Anyway, I'm gonna wrap this up. Y'all take care and happy trading and happy studying.